And that's like the question is, well, how do I get out of this thing? How do I get out of this thing? It's like it's going to blow up. It's radioactive. And as soon as they get in it, and then they get used to the mailbox money business, and they've checked out, the last thing they want you to do is sell it. And so when you get to the point where, hey, we made a bunch of money on this, or we made money on this, we're going to sell it. It's a good idea. Yeah, liquidity event. It's like, why are you selling it? It's a great property. I don't want you to sell it. It's like, Jesus, we can't win. Can't win. So yeah.
And that speaks to the maturity of the industry, right? I mean, we have a couple of decades and several full cycle events, not only as a firm, but also industry wide, and taking it from the theory that we had 20 years ago and now actually seeing it come to fruition. We're in the business of buying, managing, and selling. DSTs are a professionally managed engagement. 721s are a little different, right? I mean, 721 is a DST first, but it has an end game that is sort of a prerequisite end game where eventually it's going to be connected to a larger, more diversified portfolio. And again, that's not the right solution, or it's not the wrong solution. It's just a different solution, and that's what I love so much about how where we've gone as a market and as an industry is there's been innovation, thinking about the client and what a client might need, and what a client might maybe a client doesn't need just one thing. Maybe a client needs a diversified menu of different alternatives, and that's now applicable to, you have different strategies within sectors, you have geographic diversity, and you also have structures that accomplish different things, and that's
So how do you like the 721, and you guys, how popular is that product for you? Because I look at it, and we're in a market obviously where seller finance is become sort of a necessity at times, and I feel as though so often people that will accept seller finance don't understand the tax consequences of their actions, right? I mean, they think they can do an exchange when the balloon payment comes in the future, or they don't. They think they're just going to pay tax on the principal payments as they get them. And, you've got both, but they don't understand the tax on, debt relief and depreciation recapture too at that point in time. And just the whole taxation of 721 is pretty cool too, how it flips it upside down. We've had a couple clients in the last 2 months, I think, that they came into us honestly terminal. So it was the end game that they were looking for that would allow the liquidity event, at least while we have stepped up basis in existence, right? We don't know what's going to happen, who wins, what happens with that. But it seems like it's another arrow in that quiver. It's a great solution for people that maybe want to spread the tax over time, but get out of the management, and they want that liquidity going forward. I mean, what kind of, as far as inland and what you're seeing, how's the pressure on that space? And why don't you actually maybe define exactly what the product is for people that don't? They're thinking, what's a DST? Well, what's a 721? We're going to get to it.
Yep. Yeah. So a 1031 is kind of the baseline, right? You sell investment property, and you can reinvest into another investment property through Section 1031 of the code and defer your taxes. That's a DST anchors on that tax provision, which was established in 1921, over 100 years old, old as dirt, almost. 721 is in the arena of securitized product. 721 it's not new, but it's really gained a lot of momentum here the past several years. And what 721 effectively allows for is a property could be contributed to a real estate investment trust, or a REIT, on a tax-deferred basis in exchange for operating partnership units, which act kind of like shares of the REIT. So what it offers the REIT is an opportunity to acquire assets without coming up with cash. It's a cashless transaction. What it offers investors is an opportunity to contribute their asset, enjoy the broader diversified benefits of the real estate investment trust, and maybe have a sight line to future liquidity.